everybody, what's up? It is Thursday, April 8th. And before I get into the economics and market stuff, I want to talk about something that I think is very concerning, and that is the rising tensions between Russia and Ukraine and the possible involvement. Well, I think the United States is already involved. I think they're provoking the Ukrainian government, the Ukrainian military to, go to war against Russia, which would be absolutely insane. And now the Biden administration, I hear in the news I'm reading, is thinking of sending warships into the Black Sea. That would be another just insane provocation. Russia has sent something like 30,000 troops to the Ukraine border. The Ukraine military is advancing into eastern Ukraine, that is the Donbass region, and they're basically shelling and bombing. A lot of ethnic Russians live there, and Russia, I think, has made it pretty clear that it is going to defend its people in that region. And Biden has said, in talking about Crimea, which historically has always belonged to Russia, Biden has said Crimea is Ukraine. So I do not like what is going on at all. It is very scary. Biden has surrounded himself with, I think, a totally insane neocon foreign policy team. And I'm really, really worried that the U.S. can engage itself in a hot war against Russia, and that would be horrible. Now, insofar as the markets are concerned, a couple of things. Number one, the weekly AAII bullish consensus was, bullish sentiment now in that survey is the highest in over 3 years. You have to go back to January 2018 to see bullish consensus this high, bullish sentiment. And likewise with bearish sentiment is the lowest it has been in January 2018. And you may recall that, January, that year, 2018, was a choppy year for stocks. We had a peak in the market in January. We had a pretty big pullback, and then we had some rocky periods. And if you go back and if you watch my videos at that time, I was bullish on the dips, and I kept saying you got to buy the dips, you got to buy the dips, you got to buy the dips. Okay, that worked out really good. But you had to be on top of the situation. You had to know what was going on. So if you look at sentiment indicators, they are at extreme bullish levels. Now, I have to say, those things are not always perfect when it comes to timing market swings. I talked about all last year, that same weekly AAII sentiment survey was bearish for like forever, all the way up until the election, and the markets were going up. Once we got through March and that pandemic crash, but then it was going up. So it's not a timing indicator. I'm just telling you that market sentiment right now is really, really bullish. All right, so if you want to take a contrarian view on that, it would suggest that at least the market is susceptible to a pretty significant pullback. However, we're seeing unprecedented fiscal support in the economy right now. And so with that understanding, it's possible that we may see these sentiment indicators go to even more extreme levels. I think also you would need a catalyst in this situation to trigger a sell-off. What can a catalyst be? Well, I just mentioned one potential catalyst. If we go to war with Russia, forget it. You're talking about a horrific scenario for the market there. So keep your eyes on that, because that is not a little thing. It really, really disturbs me and bothers me that Biden's team, but, at the same token, I knew the guy was a neocon. I knew he was going to be a tool of the neocons. And let's face it, we all know that Biden and his son and his family enriched themselves with their business dealings in Ukraine. So, like, there's an attachment there. That's all I want to say about that. I want to talk about the whole SLR situation. Now, remember, first of all, if you've been following me for any length of time, you know that I've been talking about leverage ratio, reserve balances, and the impact on bank balance sheets. I mean, going back over 2 years, I've been talking about that. When nobody was talking about that stuff, I was talking about that stuff right here on this channel. I was educating you about that stuff on this channel. All right? And then all of a sudden, you know, like in December, January, that kind of, you know, caught everyone's attention, and everybody was like, oh, the SLR, and banks are going to have to sell treasuries. And I've been telling you every single week, I've been giving you the numbers. No, they're not selling. Who's selling? It's speculative short selling of treasuries. I said the Fed is not raising interest rates. These short sellers are small speculators. They're buying into the hyperinflation nonsense. And I said bond yields will stabilize. They'll start to come back down. And that's exactly what's going on. Yesterday, we had a 60 billion reserve dump onto the banks. There was a 60 billion in treasury spending yesterday. Crickets, nothing happened. Which is what I said. I said that the banks are in compliance. They know what's happening with respect to the TGA, the Treasury's account, you know, being drawn down. They know what's happening now. They're back having to be in leverage compliance and all that stuff, regulatory compliance. I told you all this. Everyone was saying like hyperinflation, rates are going to go through the roof. I said, look, Fed is not raising interest rates. If the Fed was saying it was raising interest rates, I'd be the first one right here to tell you start shorting the treasuries because they're going down. So I told you all this stuff. The 10-year, what was it, 163? It's going to come down. We'll get, you know, as these reserves come back onto bank balance sheets, I mean, there's going to be a lot of, again, there's a lot of cash, bank deposits. How do you buy a treasury? With US dollars, the addition of dollars into the banking system, they're going to be buying treasuries. So yields are going to come down. The whole short selling thing was based on the hyperinflation nonsense, and it was based on some people who thought they were really smart and started talking about the SLR and saying banks were going to have to dump treasuries. And we saw the numbers every single week. And that wasn't happening. And even if it was happening, it, as I explained, it does not change their regulatory situation because they get reserves. You sell treasuries, you get cash, and that still stays on your balance sheet as an asset, and it still factors in. So that's not a way for them. That was never a way for them to deleverage. Even I still see people talking about this now. Like some cataclysm is coming. If there's going to be a cataclysm, it's going to be a war, the United States against Russia because of Ukraine, which would be the most idiotic thing. I mean, you want to get into a war with the largest nuclear superpower over this ridiculous Ukraine. Unbelievable. Anyway, that's it. Have a great rest of the evening. I'll see you tomorrow. Bye-bye.